Hi, this is Pat Guinet, Senior Founding Partner of Guardian Financial Partners. And in this episode of Why Independence, Why Now, I want to talk to you about how much more money you can earn as an independent RIA versus working at a large wirehouse. There's three basic topics I'd like to cover: the economics of moving from one wirehouse to another, cost center accounting and how it impacts your payout, and finally, the phantom income on that signing bonus that you receive. When you're considering moving from one wirehouse to another versus tucking into an RIA, you're actually talking about the difference between continuing as a W-2 employee or becoming a 1099 employee. We've found in our transition that the tax benefits and the income benefits of a higher payout in the RIA channel far outweigh moving from one wirehouse to another, receiving that signing bonus, and being a W-2 employee. Phantom income. If you've moved from one wirehouse to another, you know exactly what I'm talking about. If you haven't, please listen. You get a large signing bonus up front, you sign a contract for 9 years, and every single year they forgive 1/9 of that signing bonus by adding it to your income in that year. Here's what's critical to understand. That phantom income has to be taxed when it's forgiven. So first you give up 50 cents of every dollar you earn because of the lower payout and the large platform that you're supporting. Then of the remaining 50 cents that you get to keep, you pay your taxes out of that. You pay some of the expenses that you use in marketing to your clients. And then that net amount that you're left with after taxes, you have to pay the income tax on the phantom income from that net amount. It's shocking how much you give up in order to meet all of those commitments. It's worth having a discussion to consider the higher payout and more focused cost management that comes with tucking into an RIA. So why are the payouts so much lower at a wirehouse than what you could receive becoming an independent RIA? It's fairly simple. Think of the size of those firms. They're massive. Thousands of employees plus thousands of advisors. And those employees all work in different departments, and they have cost center accounting impacting their decisions. Each department has to be profitable, have a certain margin. And when you think about that, if every single department in a company is making sure they meet a certain margin, they're inflating their costs a little bit so that they can be profitable. All those costs get bundled up and funneled down to you, and it's no surprise that you're only getting about 50 cents of every dollar you earn. That's the wirehouse world. Can you imagine if you could pick and choose what parts of that platform that you can utilize based on your business and your franchise and not have to pay for all those other pieces? That's the benefit on the RIA side. You get to pick the technology you need, and you don't have technology that you don't need forced upon you. Economically, we think it's a better use of your money working in the RIA channel than it is working for a large wirehouse. I'd love to have a confidential conversation with you to discuss these three topics: the economics, the cost center accounting, and diving deeper into how phantom income really takes away a large part of that signing bonus that you receive when moving from one wirehouse to another. It's all about your success and what you earn that matters to us at GFP, not about what the firm earns.